Does the price of my homeowner's insurance matter that much? Great question. Yes. I am Brandy Whitmire. I am a direct lender, banker, broker, whatever product you can think of, I probably have it. If you have any questions at all, real estate or mortgage related, always reach out and ask me. And if I don't know the answer, I will make sure I get you to the people who do. Hi, Jacqueline. There you are. What's up? Okay, make sure to ask me your questions, Jacqueline. Okay, so I got put together some questions that from my messages, from my direct messages and some of my emails. Again, I thought I would just do a surefire, like just a quick Q&A call with the basics, because sometimes I think that we get, we can get technical and we get a little bit further into it, but really, sometimes we just need to bring it down to the basics because that's really what it's all about. So, the technical stuff we'll deal with as we get inside your loan, and it's all case by case basis usually, right? So, first question I get is, hey, how do I get started? What's the first thing I need to do? So that question comes up typically when they're like, hey, do I look for a house first? Do I get approved first? How do I even get started? So if you need financing, if you're not buying in cash and you need financing, the first thing to do is to call me. Literally call me. And I'm going to probably say the same thing every time. I'm going to ask you, okay, what area, which price range, and all these things. But like literally, we need an application. So you fill an application. It's quick. It's about 5 minutes. I run it and I tell you, okay, what are your goals? What's your monthly payment goals? How much can you put down? What are you looking to do? What school district? What area? And things like that. That way, I can guide you into, hey, this is the price of house that you're going to want to go look at. Based off of what you told me that you can or want to afford. Okay, so that's how you get started. If you're doing a loan, fill out an application. Fill out an application. I can tell you exactly, even if you don't have the down payment yet, even if you don't have, if it's going to be a few months out, I might not run credit at that point. I might not, depending on what you tell me. But that's how you get started. Okay. So the second question I get is, how much do you think I should put down? Not what is down payment, but how much should I be putting down? I'm a big, I like diversifying everything that I have, every portfolio that if I have 20% to put down, I will. But if you're talking about, should I put 3.5 or 5 or 10%? I think, cash is king, and mortgage is a good debt to have. So it really just depends. The minimum down payment is 0. If you're doing a VA loan, a USDA loan, or if you're getting a bond, down payment assistance program. Otherwise, minimum is 3% on conventional. Typically, it's going to be 5%, but there is a 3% down, and it's 3.5% for FHA. So it depends on what your situation is. If you're putting down 20% or 10%, but I see that you have a bunch of credit cards or high interest debt, that's going to be a better place to put your money. And unless you know that you have a bonus. So how much should you put down? The minimum you have is what you have to. Obviously, on conventional, putting 20% down helps you avoid mortgage insurance, but we have enterprise mortgage insurance now that's super cheap. So it's, what, $30 a month for mortgage insurance inside the interest rate. So it depends on your situation. Again, I would say fill out the application. Let's look at your complete scenario, not just your mortgage. When I take your application, I'm looking at your debts, your income, what your long-term goals are financially, as far as maybe doing, putting kids through school, or you need a nest egg, or you want to pay something down, and you want to put more in retirement. Whatever that case may be, I can give you a good idea. I can help you walk through what the steps are and give you a good idea of the path of where you want to go. Third question, which I like, is it a good idea to buy down points, right? Is it basically to buy points? Here's how rates work. You have a base rate. It's called a par rate. And in that par rate, it's going to cost $0 to get there, okay? You pay $0 to get, let's call it 5%, which that's not par today. Let's just call it 5% is your par rate. If you chose 4.875, you'd have to buy it down, and that's called points. So it could be an eighth of a point, a quarter of a point, 3/4 of a point, it doesn't matter. But you're going to buy it down, okay? If you want 4.75, 4.65, it's going to go up in the amount of points that you need to pay on to get that lower rate on top of your closing costs and on top of your taxes and insurance and prepaids, okay? If you pick a rate above that 5%, let's say 5 1/8, 5.125, or 5 1/4, 5.25, 5.375, then you get a credit. So let's say your closing costs are $3,000 and your taxes and insurance are another $2,000. Let's say it's $5,000 that you would have to come to the table with. It's a possibility that you could pick out a rate of 5.5% and get that lender credit of $5,000 and pay for those costs. So some people are like, what? Why would I pick 5.5 over 5%? Because it's $5,000. So the real question is it a good idea to buy points? Honestly, in some situations, it works out. If you know you're going to be in that house for 10 years, you're never going to get another mortgage, you're never going to move, you're never going to refinance, and you're going to be in that mortgage for 10 years, then yes. Otherwise, I typically don't like it. I personally would never buy down a point, but I know I'm going to refinance every year. I like refinancing every year, deferring 2 payments, taking those payments, throwing it back down on my principal, getting my escrow check back in the mail, throwing it back down on my principal. And I always choose a rate that pays for all my closing costs. Because, I don't really care if my payment is $50 or $100 more per month if it just saved me $5,000. Because $100, let's say it is $100 more a month, but I didn't have to bring $5,000 to the table. That's going to make more sense to me because it's going to take me a year to make up $1,200 of that $5,000, right? And then 2 years to make up $2,400. So is it a good idea to buy points? If I knew I'm going to die in this house and I am never going to refinance, it's a 3 1/4 rate, it's never going to get that low again, and I'm comfortable with the taxes and insurance going up and covering that cost, sure. And I can roll it into the loan, I don't have to bring that, sure. That's not really the case. Now, I used to, think it was a good idea to buy points when the rates were higher. When I was selling 10% rates back in the day, yeah, then that's when it starts becoming lucrative to buy points down because that difference in monthly payment is now really saving you. You can make up the cost and interest within a year or two. Yeah. But again, I still wouldn't in that situation because what if in a year or two the rates go back down to 5? Then I'm refinancing and I lost all that money. So I don't like it. But that doesn't mean that some situations it can't be a good idea. Next question is, what is the time frame for a purchase or for a refinance? Okay, what's the time frame for a purchase? You want to get pre-qualified, right? You want to get pre-qualified before you go out looking. Now, you could have already found the house that you love and you're going to make an offer that day. We can get that thing closed. I mean, by law, we have to close it no less than 10 days or no more than 10 days. So you have to close within 10 days of your application. After 10 days after. But the standard is 30 days. If we need to get something done in 2-3 weeks, we can do it. It'd be just a matter of getting that appraisal back and you getting us those documents back in time quickly. But we have TBD applications in here, to be determined, so basically pre-approval applications in here that are ready to go, underwritten, already through processing and underwriting, that if you brought me a contract today and you were already in with the processor, already sent in all your documents, we could order the appraisal that day and get you done in 10 days. So that's the time frame. And I do recommend doing that. If you're out there looking, make sure you're in processing, you've signed some of the documents, you're not locked down to anything. It's a free service for you, so why wouldn't you? Send in your documents, get underwritten, pre-approved through an underwriter, and that way you are ready to go. It makes you a better buyer whenever you can tell that seller, I'm already in processing, I'm not just pre-qualified or pre-approved, I'm actually conditionally approved with the underwriting team. For a refinance, same thing. Typically 30 days is like the standard, whatever. It depends on how fast you get us the documents and how fast we get back the appraisal. Because at that point, if we have what we need from you and we have the appraisal back, we're golden. We can get that thing done. On refinances, we are seeing a lot more PIWs, which is a property inspection waiver, which means that we don't have to have an appraisal done, which is awesome because now we don't have to, you don't have to pay for an appraisal, and it's done. All we need are your docs, and we can get the thing done. So 10 to 30 days. How about that? Next question, just a few more here, is what is the best credit score to have? What is the best credit score to have? Would be, I mean, the best would be over, I would consider over 800. We rarely see that. And, keep in mind, whenever, what you see on Credit Karma and freecreditreport.com and things like that, those are not real scores. Those are based off of, basically, they're analyzers, right? They're based off of an algorithm, basically. So whenever you go to Credit Karma or freecreditreport.com, it might say that you have a 740 score. When we run it, and we run the 3 bureaus, it's going to give us 3 different scores typically, right? We take that middle score. It's probably, if you saw 740, we're probably going to see 720, 710. It's about a 20 point difference typically. So the best credit score, I mean, we're doing a loan right now at a 515 score. I mean, it's 10% down. There's, they have to document a lot of things, but we're getting it done. Credit score, I'm not really concerned that much with credit score. You want it to be higher to get a better rate sometimes, but if you're doing FHA, the rates are pretty good already. So, and you don't really need it. So I'm not really always concerned with credit score unless it's going to give you a significant difference to your interest rate and the credit that you're going to get back. So I like to see a 720 and above. That's typically that sweet spot. 680 and above, 720. Those are like the milestones. But that's that. Second to last question here. Can I shop for appraisal companies or do I have to use yours? Oh my gosh, this is like a big question. In fact, we have a couple in the pipeline right now for some reason are having the clients are having issues with. No, you cannot shop for appraisal companies on your own. It has to be with an appraisal management company, an AMC. So by law, through the HVCC laws from the government, which is a protection for you as the client and borrower and for the lender, it has to be ordered through an appraisal management company. Now, depending on the area, for example, we have a loan in the pipeline right now. She's not happy with the price of the appraisal. The standard is about 500. I think they came back at like 580, 585, something like that. And she's not happy with it. Well, we went and priced out 3 different other AMCs and they were 600, 700. So we as a lender never, ever tell the cost of the appraisal. We do an estimate and the estimate goes into the system. So they might come back and say, hey, it's a bigger house or it's in a rural area. It's hard to get to. There's a shop in the back. There's a barn or, whatever the case may be. And that's up to the appraisal company. Like, so we shopped out 4 different appraisal management companies. She's not happy because she thinks it should be what it was in the beginning, but it's just an estimate. It's just like title fees. Title fees are just estimates in the beginning until we get the actual fees from title, until we get the actual taxes from the county, until we get the actual amount of the appraisal from the appraisal management company. So, so this question is, can I shop for appraisal companies or do you have to use yours? First of all, they're not ours. We have nothing to do with the appraisal management company. That would be illegal, right? We could only order through them. And yes, you have to order it through the lender, by way of the lender, through the appraisal management company. We send you a link for the credit card, you pay for it, they go out there, done, okay? But if you got an appraisal on your own, that's on your cost. We can never use that appraisal. So no, great question, really good question. Does the price of my homeowner's insurance matter that much? Great question. Yes. So whenever you're pricing homeowners insurance, like I have one today, it's funny because these are both today, and that was not on purpose. So, but today we have a loan in there, and it's a nice loan. It's like a 1.3 million, I think. No, this is the 800 one. Okay, anyway, so it's $800,000 loan. Oh, 1.3 is the value. Okay, and I'm looking at we're having some problems with the DTI, and DTI is debt to income ratio. So, I mean, I'm like at 46% and I need to be at 45% on debt to income ratio. So I'm trying to find dollars. I'm like, can he pay off this credit card that's $100 a month? Can he do this or that? How can I find some dollars here to get the payments lowered so I can figure out? So I look at his insurance, and his insurance was $372 a month. That's super high. I don't even know if I've seen one that high before, actually. So yeah, so what we're going to do is we're going to go shop insurance for him. Probably get that down to maybe 220, 225 on a $1.3 million home. See about adding in the cars for some multiple policy discounts. So yeah, I mean, homeowners insurance, I mean, as long as you have the right deductibles, it's like buying a Coach purse at the Coach store or at Nordstrom's. It's the same dang purse, right? Insurance, I mean, as long as obviously you want a company, you want a in my opinion, like my insurance agent, I text her when I need something and she's right there. I email her. I don't have to go call a call center, do all that. So I think that part really matters because I need someone in my back pocket. And that's what I try to be as a lender to you is call me, DM me, send me a message, come into my office, get with my team. I've got a full staff here ready to go, ready to answer all of your questions. But does the price of the homeowner's insurance matter that much? Yeah. Why would you spend more for something that you don't need to? You know, I had a guy today too. I'm saving him $160 a month on his investment property, and he's saying it's not worth it. Like, what? Anytime anybody and any of you ever want to walk up to my door and give me $160 on the first of the month, please do so because it matters to me. $160, shoot. I can't believe it sometimes. It baffles me sometimes the responses I get. For a free loan, doing it at no cost, using the rate to pay for all the closing costs, so he's not adding anything to his balance, and saying that $160 a month and he's deferring 2 payments at $2,000 a piece isn't that much. I mean, I don't know how much. I mean, that's $4,000 plus. In 1 year, he'll save what, $56, almost $6,000 in 1 year. I mean, I don't know about y'all, but it takes me a minute to make $6,000, so it's worth it to me, right? So like. Anytime I can defer 2 payments and save $160 a month, yeah, sign me up. But yeah, so I have to give you some documents to make that happen. Yeah, I'm doing that for sure. So anyway, I wanted this live to be under 10 minutes because I'm going to do a test to see about views and things like that. But now I'm at 18 minutes, maybe 17 from the beginning. But these were all very good questions. Please send me your questions. Send them to me. I love them because I want to do more of these Q&A because again, I don't want to get too technical all the time, and I want to answer what you're thinking and what you need whenever you want. So DM me, it's helpful. Send me a message on here. Find me on Instagram too, Brandy Whitmire on Instagram. I do a lot of my stories there. And that's it for this week. I'll see you next Wednesday. I'll be on the road next Wednesday, so I'm going to try to get one of my cool people that I'm going to be traveling with on this mastermind to do the show with me next week. So I will see you next week, 6 p.m. Central, and I look forward to talking to you and hope I talk to you soon. Bye.